Make
More
sure that
trades, and
price
it's Johnny
didn't come
joined my
back down super
backtesting
slow.
stream,
So
and
that's
this
what.
Is it working
happened.
now?
Wait, hello?
You can hear me now, right?
Yeah, I can hear you. I just can't
Okay,
see
bro.
you. I
Yeah, my camera's off because I'm butt ass naked. But yeah, man, let's see what's going on.
bro.
Uh, bro, why are you egoing me? Why wouldn't you do the YouTube series?
Wait, what was that? I can't. Wait, what was that?
I said, why are you egoing me? Like, why wouldn't you do the YouTube series?
I'm not egoing you, cause like I'm like, bro. He's like, would it be worth it? Do you truly think it would be worth it for the content,
For you?
or for the both of us, bro? It's a
Motherfucker,
beneficial.
what?
It's a
No.
beneficial thing.
What the hell are you talking about, bro? This for you is not about content. Obviously, it's gonna be better for you for bro. All the benefits are on your end. Like you being in my videos isn't necessarily gonna boost my views. I'm gonna get the same views I would have got. This is a for you thing, bro. Like, and then you shouldn't even be worried about the content. Like I could, bro. I could say a couple things right now that I think would fix you if you actually applied it, like super quick.
Like
But I mean,
what?
if you don't want, if you're too good for me, then it's all
Bro,
good. We don't
stop,
have to
stop,
share.
stop, 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 stop. I didn't mean it like that. Chill, 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 chill,
That's
chill.
what you just said, bro.
I didn't
All
say
right, no,
that.
but one thing off rip, one thing I see, you don't really like. It doesn't seem like you really have a structure when you go into the day. Like your analysis is like, it feels like really all over the place and really really different every day. Like even if you're discretional, you should have a framework. Like if I asked you what you look for every day, you should be able to say it in like a sentence.
Right. That's true. No, that understandable. Yeah.
Well, tell me what do you look for? Like
Oh,
if I asked you what do you look for every day?
so basically, I use the power of three daily candle, right? So, what I want to see is manipulation
Okay.
two and
Wait,
manipulation.
the daily?
Yeah. Like. So like, I'll
God
run.
damn.
So like, I'll run down here. Like, so basically, I go in the daily time chart and I look at where price has been, like current candle, right? So as you can tell, like right here, we're in a daily fair value gap. So then I look at the hourly, right? Time frame alignment, you know? So I'm like, okay, this could be a potential market maker buy model, right? So then I look at the hourly, and then I look at the 5 minute, and then I want to see SMT at the lows. And then
This is what you look for every day. You look for an
yes,
SMT to load every day?
yes.
Okay.
And then now, going on the 5 minute, we look for SMT at the lows, which we don't have, we truly do not have SMT at the lows. So now I'm kind of like iffy, you know what I mean? I'm kind of iffy. Are we in a market maker
So,
buy model?
do you have a model or no?
So I buy below lows and sell above highs.
What in the hell? Okay. I'm gonna tell you what I think. You don't have to apply it, obviously. I think your high time from analysis could be way simpler. So if you go on like the daily,
Don't
the
listen
four
to him. He
hours.
sucks.
Oh, what the fuck?
Okay.
John is in here too?
All right, Johnny, why did you stop helping him?
Sindruke, hundruke.
Old ass dude talking about some anime. But
He has
yeah,
the recording, bro. He can go back and study that shit.
I know, dude. I took what you said to me. The important fair value gap is the fair value gap that broke above the highs, and we shouldn't seek back below that fair value gap below if we're truly bullish or bearish.
So, yeah, pretty much. The fair value gap that forms after sweeping a high, breaking a high, it should be respected if you have another objective higher.
Absolutely, yes.
So that fair value gap right there that you have marked out, that should be respected.
Yes. And guess what?
What time frame?
look at that smile on his face.
No, but like, so like the fair value. So I saw this and I'm like, we're breaking above high, so I'm already bullish. Even though we're in like a premium here, right?
Yeah.
If we're bullish, this right here can act as your breaker. And
Well,
then,
can I give you my opinion on this?
Yeah,
Can I say
yeah, yeah.
something? I think what would help a lot of people, including yourself, is if you change your frame of mind from like looking for confluence to go in a certain direction to like looking for a draw on liquidity and then finding the confluence to go to the draw on liquidity. Because right now you're saying we're gonna long just because we're in this daily fair value gap that broke the high. But like, what are we targeting? What are we trading
Yeah.
for? You know what I mean?
Yeah, so when you guys get on the charts, you guys always look for a draw on liquidity first
Of
before looking
course.
for. Because like, how would you guys know what draw to look for if you guys already don't have? Or at first, how do you guys find your draws on liquidity if you guys don't know what the framework is surrounding that?
I can tell you mine. I can tell you how I do it. It's pretty simple.
Yeah, because I
So,
watched like one of your videos. You say you just mark out previous sessions highs and lows, London session highs and lows, and then like
well, that's part of it, but for me, it's really like high time frame, internal and external. So really, all I do is I go to the daily and the 4 hour, and I look: did we just take an external high or low, and are we going back into a fair value gap, or are we in a high time fair value gap, and we should be making a push to an external high or low? It's pretty much that simple. And then from there, like I'll start on the daily. I'll see if we're in a daily fair value gap, and then I'll go into the 4 hour. Are we in a daily? Are we in a 4 hour fair value gap, or are we at a 4 hour high? And should we trade internal or external? That's really it. And then from there, that's when I use the previous session liquidity on like lower time frames because it will give me different draws on liquidity besides the external high or low or besides the high time frame value. So I mean, it's really heavily based on like high time frame internal to external because that's realistically how the market moves. So
yeah,
it
of
makes
course.
pretty much like make sure you're in line with the high time frame.
Right. So if we're bullish here, so for example, if we're bullish here, we should.
I can tell you how I would go through this if you want.
Yeah, let's run it. Let's run it.
So right now you're on the daily, and wait, what time are we on? Is it like pre-market or
This
are
is
we
9:30. Like as soon as market
Okay,
opens.
all right, bet. So right now, yeah, I would obviously see that we're in the daily fair value gap. I would see there's relative equal highs on high time frame. It is pretty insane that you don't trade with ES. You
No,
need to look
I
at.
do. I do. It's on my left side over here, or
Oh,
on my right
okay.
side over here. I just don't have it
Okay.
shown.
Oh, I see, I see. Okay, bet. Yeah, so I mean, I'd be watching for SMTs. I mean, you'll know if there's an SMT or not. But those highs look really juicy on NQ, and we already pushed into internal. So the idea of those relative equal highs getting booked aligns with the idea of trading from the internal to the external. So right now, we're perfectly bullish in my opinion. So now I would go to the 4 hour. And when I go to the 4 hour, I'm looking to see if there's any fair value gaps that need to get filled before we get the move up. Because in my head, I'm already decided that we're going to long. So right now, there's no 4 hour gaps that need to get filled. So now I'd go to the hourly. And then I would see that we're inside of the hourly internal. So right now, personally, I would expect that longs are going to happen like around right where we're at right now. If I'm right about us going to that daily external high. So then from there, I would just go, like me personally, I go to the 15 minutes to see if there's anything else. And then I just look for 5 minute order flow to align with my drawn liquidity, and I find entry that way. But I mean, this day specifically looks really clean for those highs, unless there's something on ES that I can't see.
Here, I'll show you.
But yeah, so I mean, that's how I'd go about it. Johnny, you can tell him whatever you want to tell him, but that's just me.
I mean, it's the same shit, bro. I'm just looking for a change in delivery out of that daily POI on the 1 hour. And then I would just fractalize the daily POI. So you got a 1 hour for value gap. You got a turtle soup at, what time is that on the 1 hour?
Right here.
Yeah.
This happened during London session.
Okay, so I would think that's my low of day. So go to the 5 minute. So then you have a change in delivery on the 5 minute. That's been respected. So if you have 930 manipulating under those lows, retapping the CISD, I would probably enter on there. Expecting London to be low of day.
All right. Let's run it. All right. So this could be your turtle suit,
Yep.
right?
Mm-hmm.
I bet.
Is there an SMT with ES right now?
Let me check on the 5 minute. Right? Yes, there is
Yeah.
SMT.
Yeah, then that's beautiful. I'd probably be looking along right now too.
I see. And then like stops could be potentially at low of day if we decide to take this entry.
Hell no. If I'm taking that, I'm waiting for like a 1 minute inverse or
yeah.
realistically
You're right.
like a 15-second CISD or something like that.
Yeah, I have the retro one, so I can't go on the 15 second. So yeah,
Damn.
we'll eyeball it.
Ooh.
Okay. So would have been no trade so far. Okay, did that 1 minute get inverse?
Let's see.
I can't see.
Yeah.
Oh no, not yet. Okay. I mean, I can't really see ES, and I would want to see what we just tapped into to the downside. Do you know what we tapped into? Like, what's that big box that you marked?
It's just the daily.
Okay, back to the daily gap. And there's an S&P with ES?
Yes, there is. And we have a
Okay.
5.
I mean, me personally, so far, I'd be longing this 1 minute fair value gap, or like if
That,
it gets inverse.
is that
For
the
like,
15?
Yeah, this is a 5. Yeah, this is a 5.
Fuck, it sucks you can't go to the 15-second.
Yeah.
yeah.
But that low shouldn't get hit. If it's a true low of day, it shouldn't get hit.
Right. All right, let's go on the 1 minute. All right, we'll just wait for this inversion or something.
Mm-hmm.
All right, inversion.
You said this is the 5 minute?
This is the 1 minute here.
Oh, okay. I mean, I probably would have been in earlier, like how Johnny says. Like, I use the 15-second CISD pretty frequently on a trade like this, which is like obvious in my opinion. So
Right.
this 1 minute inverse wouldn't be my favorite because it's inside of that 5 minute gap. So if I missed my original entry, I'd probably be waiting for the 5 minutes inverse and like find a 1 minute entry from it. But I mean, right now I'm more so like thinking about drawing liquidity. I feel like that's what's going to be most helpful for you right now is finding a draw.
Right.
I just want to see if I'm right about these longs.
Do you have any news on this day? At like 10?
Let's see. Let me look at my left over here. No, it's a Monday. Wait.
Mm.
Yeah, it's a Monday. No news. All right, let's wait here.
You got anything on the 15-minute? You
This
got
is
that
the-
OB right there. 15-minute change in delivery. You can just look at the 1 minute. The 1 minute, so you just made a new low, right?
Yep.
All right, so just wait for a change in delivery on the 1 minute.
Mm.
We don't have anything.
Okay, so we do
Oh,
have it
there you
now.
go.
So would you? This long doesn't look bad. Technically,
Yeah,
right?
that looks good, yeah. What time is it? Is it the new 15-minute candle?
It's
Okay, yeah, so you just swept the previous 15-minute candles low. 1 minute change. That 4 a.m. low should be good. Is there SMT at that 4 a.m. low with you guys?
yes, there is.
Oh, there you go. Smack that shit, bro.
Oh shit, I don't know.
W signal. W financial advice, Johnny.
Look at this dude smile, bro.
Bro.
I know. Too easy.
Mark the 1 minute fair value gap.
Oh yeah, because it broke above the highs. Or so would you have chosen these highs up here, or I mean, it's the same thing, so it's fine. Same thing.
Those highs are that other high up there that got swept.
Yeah. This high right here.
Oh, it's only 10:10. Okay. I probably wouldn't have been in the trade yet. It looks like it's going to be a no trade day for me. Just too choppy. A 5 minute inverse would be when I'd be interested again, just because its price action is just so bad.
Right.
And I trade Johnny trades reversal. I trade continuation, so our entries are a little different.
I trade both, bro.
Oh, fire.
If I'm not really confident in the reversal, I'll just wait.
Yeah. So like here for me, my continuation model is I'd be looking for a 1 minute entry to form off this 5 minute inverse.
So we inverse this
Or
here.
in a scenario like this, if I'm just like super confident in the draw, I would just limit order this 1 minute value gap. But I can't really tell if I'm super confident in this just because it's a no news Monday. But that, I mean, if we're gonna long, obviously that fair value gap should hold. So
Right. So here, we'll just place another one right here. And then like, what were your stops? We just like
below that third candle. So
Sure,
yeah, that
that's
one.
fine,
Right
yeah.
there.
Let's put it up here. Bro, shit.
And I'd be break even now. I'd be stops to break even.
Bro,
Yeah. See how Johnny traded the reversal and I traded the continuation? That's actually gas.
That's where you would pyramid too,
Mm-hmm.
if you wanted to.
Yeah, you could have added like 3 times already. ES didn't take that high, right?
Wait, let me see. Oh shit, it has.
I mean, you're already break even. You don't have anything to stress about, but I mean, yeah.
Yeah, but if we're yeah. Facts.
There
Oh,
you go.
what the fuck is happening, bro? Bro.
Johnny, we actually just.
Bro, this is fun. I love winning.
I mean, I feel like we just put you on pretty crazy. Hopefully, you like remembered everything.
Yeah, no, like what I really took from Johnny's last call was like, okay, if it breaks above the high, then we shouldn't see lower. So then I started seeing like market maker models. So like, if we're breaking above the highs, we shouldn't seek past, I guess, below the breaker or something like that. So that's why I've been like looking for turtle soups inside of the leg range. You know what I mean? So that's what I was trying to do a lot more.
I'm gonna be honest, bro. I don't think you should be turtle souping. Like,
Yeah, not
Yeah,
yet,
it's,
not
straight
yet,
up,
not
bro.
yet.
bro,
Straight
it's
the
just
fuck
like
up.
for me, even me, I'll very rarely turtle soup, bro. Turtle souping is like a super high skill set, and like it's just clearly not time for that. I would look at a more safe model.
Yeah, because like if I was to turtle soup, I like I said, I would be looking at the market maker models, right? And then like I would only soup inside of a range. If I'm confident
Fuck a
that
market maker model, man.
what?
It's a fuck a market maker model.
Yeah, bro,
Look at
straight
drawn
up.
liquidity, look at order flow, and you will get everything you need out of the marketplace, bro. Like, fuck a market maker model. It doesn't
Just
do
look
it.
at swing highs and swing lows as your DOO, bro.
Yeah, yeah, of
Yeah.
course. So like I saw that you guys marked out your drawn liquidity first.
Yeah, of course.
Yeah,
Comes first.
that's
That's
how
how
it
you.
should be.
Yeah, that's how you build narrative, bro. That's how you build
Yeah.
context.
So like let's hold on. Let's go. Wait. So
Well, this is why I told you, like you see that daily fair value gaps there, but as I work my way down the time frames, you see how we make the move from the daily gap to the draw. Like that's just all draw liquidity, and that's all order flow, bro. That has nothing to do with the market maker model.
That shit's so like, bro. People fucking pattern trade that.
I know,
That
bro.
shit's like, nah, bro. I wouldn't even focus on that, dog.
Yeah.
right. So my thing is like, if let's say there's a low inside of a fair value gap, like for this, for example, is this considered external or is this still considered internal draw?
That's internal.
Internal.
Yeah.
So
Well,
so what would you guys consider as external? Like obviously I see
Highs
highs
and
and
lows.
lows, right? But like, oh, we have a low here, but then you guys can set this.
But you're inside of the range, like
yeah, zoom
it-
out. Zoom
yeah,
out.
like
Oh, so like it has to be like outside of like a dealing range technically. So like for this right here would be external here,
Gotcha.
and then like would this be considered as external here also?
Q. Wait, Q. What the fuck is a dealing range?
A dealing range is like
It's just a range, right?
yeah, it's just a range, yeah.
All right, then just call it a range.
All right,
Hey,
You're
zoom
actually
out.
falling
My
for the
bad.
ICT.
Go to the weekly. Go to the weekly real quick. All right, so you see that low where the move started?
Oh,
That low down there? No, the other low.
This one right here.
That one, yeah.
Yeah.
That'd be your external low.
Oh, because this from here to here, this is already your range. And then
Exactly.
this,
Yep.
I see.
And then anything inside that range is internal.
Mm-hmm.
Oh, I see. I see.
Yeah.
Okay.
If you're ever
Okay.
confused about like if you see a low like in this current bullish range, if you see a low in that range, just go to the higher time frame, and it'll more than likely be like a higher time frame for value or something. Because that daily fair value gap, or what time frame is this?
This is the weekly.
Okay, so yeah, so the weekly fair value gap that's right there, the low that's like that made the top of the gap. You know what I mean?
The
Like
low.
mark out the gap. Yeah, the top. Yeah, that wick, the top wick. Every candle has a high and a low. So that low right there, even though it's not a swing low on this time frame, it's going to be a swing low on a lower time frame. So those are the lows that you're seeing within the range.
Yeah, yeah.
So it's all just internal liquidity.
I see. I see. Okay. That clears it up so much because like I would like see like a swing low inside of a fair value gap, and then consider that as external, right? Because like what I've been doing is like focus on just highs and lows, fair value gaps, and like potentially order blocks that swept out liquidity. And like
I mean, in my opinion, you really only need like internal and external in the higher time frames because it just like it makes the draw on liquidity so clear, and the higher time frame moves so much like clearer than like the 1 minute and like the 5 minutes. So I really only use it on like the 1 hour and above.
So like let's say we sweep out this external, right, and then we start to get like order flow switched towards the downside. So you guys are only targeting like a discounted PD array, right? Just not any like fair value gap that's bullish inside of a premium, correct?
Can you ask that again? I don't really understand what you
Okay,
said.
so like let's say we come up and sweep out this high, right? Let's say we come up, we sweep out this high, and then we come back down. We have an order flow switch, and there's a like right here. There's a fair value gap here, right? Would you guys be looking to target this fair value gap as internal, or would you guys be looking to target like a discounted?
I'd be looking for that for value gap because you just swept the external high. So that if it closes a body above it with an imbalance, I'd be looking for that to continue higher to another objective higher.
I see, because we're about to close. If we close above this high, then these fair value gaps are important.
Because if you close above that high, you're most likely going to make a fair value gap. If it's
Right.
just wicking and rejecting the high, then you might come back down.
I see. Okay, that makes a lot more sense. Okay, that makes a lot more sense.
Yeah, I mean, this is like a, I call it like a dumbed down version of daily profiles because for like when you use internal and external, basically you're looking like if it's a push from internal to external, that's basically like a reversal, like a London reversal or New York reversal from the high time frame period. So it makes it simpler. And then yeah, like sweeping the external high would be like it's the same thing. It's just like dumbed down. It to me it
Yeah,
just makes way more sense.
I see. I see. Take another trade. Okay, we'll do one more.
Yeah, after this I'm gonna
Yeah,
have
yeah.
to hop off.
We'll do
But
one more. We'll do one more. All right. So I can tell we're already like we haven't hit this draw on liquidity yet, right? This draw on liquidity yet because I mean, uh, internal. Wow,
This
internal.
motherfucker, dude.
What? I literally cannot speak. Okay, internal draw, and this is the draw on liquidity on the weekly external.
I
So,
would still mark that the relative equal highs because that like
oh wait,
daily
oh yeah,
external high hasn't been taken yet. Yeah.
yeah. I thought we did. My bad. All right, so now we're already bullish. So drop down to the hourly.
Wait, hold on. What time frame were you on before this?
The daily.
Yeah, go to the 4 hour.
Oh yeah, yeah. So I keep. I'm always not gonna lie. I low key don't even look at the 4 hour sometimes, just because like if
Well,
I
the 4 hour is so clutch. You have to look at the 4 hour.
so like what are you guys looking here on the 4 hour? Just like
Well, I mean, I told you earlier. Like for me, I'm looking at internal to external on all time frames on the way down. So, like how we already decided on the daily that we're making the push for that external high. When I go to the 4 hour, I'm just seeing if there's an unfilled fair value gap to the downside that we could book before we go up. And then if there isn't, I go to the 1 hour. I look for the same thing. Is there a 1 hour gap to the downside that we could book before we go up? And if there isn't, then I just assume we're getting ready to long.
I see, I see. So
Because
if
we're either moving to a fair value gap or we're either moving to a high, like on all time frames. So if there's no fair value gaps to the downside, and I know we're making a push to the high time frame, external high, like there's nothing else that we need to do. It's just time to go.
I see, so you're kind of just aligning all the time frames together technically. So if we already tapped a daily bullish for value gap, you want to see the 4 hour do the same thing, like a 4 hour.
I just want to see there be either an already filled fair value gap to the downside or just no fair value gaps to the downside, so that I know I'm ready to long. If not, then I'm watching for any unfilled fair value gaps to the downside. So like right now you're on a 4 hour, right?
Right.
Yeah, so there's no fair value gaps to the downside. Like coming from the daily gap on this price league that came from the daily gap, there's no 4 hour gaps. So I'm not worried about anything on the 4 hour. Now I would go to the 1 hour and look for the same thing. So there is a 1 hour gap there that we could tap into before we go up. I personally don't think it's likely, but we could. So I'm watching it.
Right. But like, what if I said like, okay, if I'm bullish, this low is technically not, I guess, quote unquote, real. It's not a real low day, right?
Why not?
Like this London kill zone, we didn't tap anything higher time frame wise, so we can anticipate this could be like a draw also, correct?
I mean, it could, but we already decided that the daily external is the draw, and
Yeah.
like I said, if we're moving, we're either moving to a fair value gap or we're moving to a high. So if we're this close to the daily external, we're not going to go all the way down to those lows. Like we're either going to go to this hourly gap and then go, or we're just going to go straight to the daily external high because we're just like we're literally right there. Unless there's an SMT with ES or something.
Oh shit, I forgot.
Got to pay attention to ES, bro.
Yeah, yeah.
Yeah.
Okay, we do have SMT here.
Yeah. So I mean, like because there's an unfilled gap to the downside, and we do have the SMT, I would be cautious. Like I wouldn't be like brain dead about just taking any longs, but I would still be favoring longs because it's the draw. Like it's the high time frame draw.
Right.
And also, did we have an SMT at the lows on the high time frame or no?
On the hourly, uh,
Like back in that daily for value gap, was there an SMT in there? Go to the 4 hour first.
yeah, this is the 4 hour. No, there was no SMT.
Okay. No SMT? Okay. Then, okay. Yeah, because the reason why I said that is because if there's an SMT at the low, and ES was, or an NQ was the lagging pair, that means that it's not supposed to make the new high first. So I wouldn't really consider the SMT that's at the top an SMT, but since there was an SMT at the low, then it's valid. So it is something to watch.
Right. Okay. Okay. All right. Let's play this out.
What time frame is this?
This is the 5 minutes. So,
Yeah.
like, we broke above the high here
Hmm.
with the fair value gap.
I'm looking for long out of this gap, zero
Yeah.
questions. I'm watching the 1 minute though.
Yeah.
Do you have any news on this day? No.
On the 21st.
Oh, and we put in relative equal highs in the 1 minute too. Right next to it, that's what the ICT nerds called engineers liquidity. I don't really.
No,
I'm
there is
not.
no news on this day either.
No news.
All right. Let's see. Let's see.
Yeah, we're about to go kill that.
Okay. Let's just fucking long.
Whoa,
No,
whoa.
hold on, bro. Chill.
Yeah, I was not saying the long. I'm saying we're gonna go murder that.
Because like
though.
what I saw here, because like I mean we do have like this.
Holy, me and John, bro.
Around,
Like,
bro.
what the fuck? That's actually hilarious.
I mean like we. Okay, you're right.
I mean, this is something I do. Like when I think of an entry, I'm not even thinking about PD rates. Obviously, like I am, but like the forefront of my mind is thinking I just want a good risk reward with a protected stop loss. So like in a scenario like this, I'm not even necessarily looking for a PD rate to enter off of. I'm just finding a place that I can enter that has a well protected stop loss that makes sense and then gives me a good risk reward. And if I can't get that, then I just don't take the trade.
Okay, maybe that's what I need to start doing too. It's like maybe that's what I need to start doing also. Cause like I'll just like enter low key. Like if I'm being completely honest, like I'll just enter sometimes, and then like be like, oh shit, oh stop
Yeah,
this
no,
slow, and then
definitely.
like
Yeah. You would. It's better if you have like if you're chasing a trade and you're getting a horrible risk to reward, and your stop loss isn't protected. You're better off just sitting out. Like even if that trade was going to win, you're better off just sitting out, bro.
right, understandable. All right, let's play it. I mean, we do have like equal lows down here also.
Go to the one. Is that the 1 minute?
Yeah, this is the 1 minute. Yes.
Yeah, I would definitely be on the second chart at this point. So it kind of sucks, you know.
Yeah.
But it's
All right, so we ended up sweeping out this low here. SMT.
on a yes.
Yeah, on a yes, yeah. Hold up this way. So we ended up sweeping out this low here.
Okay.
Let's see.
It's pre macro, by the way. It's not even 9:50 yet. Poncho, move, bro. Did we get an SMT on that push?
Yes, we did.
Perfect. Yeah, this is gonna be long then because it happened like literally right at the macro. This should be smooth.
This is 5 minutes. Yeah, this 5 minutes still holding. It looks like.
If
Go back
I
to-
could, I'd probably smack that 1 minute inverse if we get it. Me personally.
Wait, go
But
back.
I mean, like I said, I would probably already have smacked this on the like 15 second coming off the SMT just because it's too clean.
Go to 5 minute.
A 5 minute. Yes, this 5 minutes still holding. And then we have a
Poncho,
5
you just fart? What in the hell?
Wait, go to 1 hour real quick.
Oh yeah, that's still unfilled. But
We didn't tap that 1 hour. Okay.
No, we did not.
wait, but go to the 15 minute. Yeah, so the 15-minute internal to external, like the way that I view it is kind of like it makes the hourly gap protected because the 15 already pushed to the internal. So if we're right about the drawn liquidity, there isn't any real reason to push back there unless we're like gonna go get an SMT. And, I mean, that's how I view it. But obviously, we could always just trade back to that gap. I just don't think it's likely now.
Right. So like, let's say we do from this fair value was the internal and this is the external. We already swapped out. We went from internal to external. So wouldn't we see like internal again?
But so an uptrend is higher lows and higher highs, and that's all that internal to external is. It's literally just a trend. So in this scenario, you're looking at the 15. We had to push to internal, then we had to push to external. That low that was inside of that 15-minute value gap should be protected if we're actually uptrending because uptrends make higher lows. So that's why I view it as a protected low because order flow on the 15-minute kind of makes it to where if we are bullish, we don't really need to make it there. So I personally would feel safe longing.
We are tapping into an OB right there on the 15. Are you familiar with Model 1 or not?
No, I am not.
Okay. All right, go to the 1 minute. Yeah, so that would have been your entry. I mean, if you're not familiar with Model 1, I mean, don't worry about it. But
Yeah.
okay.
All right, let's run this. All right, if we get inverse this gap.
Should be a banger in my opinion. Yeah, I mean this is something that would be up my alley for sure.
So for these inversions for value gaps, like
My
let's
stop's at the bottom of that first candle, like the first green candle, yeah. And then, well, it depends. Look at the risk reward for the draw.
oh I guess yeah.
I need a minimum too. I don't love that, but I would take it just because the draw is so clear. I prefer
What do you
more
think,
than
Johnny?
I like it.
Like it? All right, bet.
my stops would be break even at this point, or below the order block, the 1 minute order block. Yeah. So, like, it's perfect, bro. Like,
There you go.
Because like, if it, let's say, hold on. Because let's say like right here we have a 5 minute gap, right, and we were bullish here. So are you guys entering like during macro times, correct? Because right here, I mean,
no.
I,
Like, the only, I enter in macro, the only time that I really don't is if we get a open manipulation that gets me an S&P and like the draw on liquidity is super clear. Outside of that, I'm usually waiting for the macro.
I see. Because like if I was just if you guys were here and I was trading like the flow state model or whatever, like I would have saw like this 5 minute gap and then be like, okay, if I was to go on the 15 second, I'm pretty sure like maybe here we probably would have gotten like a 15 second like change in state of delivery here, something like that. But
Yeah, but you would have got, like, you probably would have been at break even at that point. Like, you would have been, that first green candle probably got that 15-second change in state of delivery, and then that second green candle easily should have justified you going break even.
You would have had a fair value gap there in that 15 second. Pretty sure.
Yeah, so you would have protected.
oh, I see. Okay,
Right there,
okay.
you also got a 1 minute change of delivery right there. I mean, a little bit after Moore's entry.
Right here.
Right there, yeah. You would have market entered after that closure right there.
Okay, I see.
Mm-hmm.
Bro, I'm loving this, honestly. Cause like, I'm loving this, honestly. I'm loving this.
I'm not gonna lie, bro. I think, I mean, I hate to glaze myself, but I feel like my continuation model is just so like simple. As long as you understand drawn liquidity, that like I think it's something you should pick up because it'll just like how I told you when I first came in. Like your analysis just seems like so all over the place. I think if you just picked up my model, it would just be so easy for you to pick up that you could just run with it. I don't know. That's just my personal take.
Yeah, cause like, drawn liquidity. What like I feel like the like all the patterns, all the like, what is it? All the PD arrays. I feel like everyone masters, but just time and narrative and just drawing liquidity is the hardest part on my
Everybody
end.
learns this shit backwards, bro. Everybody's fucking learning index fair value gaps on the lower time frames. They don't understand
The
hard
narrative.
DOLs and shit.
Yeah, so yeah, that was my biggest problem that I had, and like just overall bias. But it's slowly getting better for sure. But I'll probably start doing like external to internal, obviously, and then like yeah, I mean shit, we're running
Bro,
on.
I mean, high time frame internal to external. This is my model, quote unquote. It's still discretional, but it's like my model. High time frame internal to external inside my draw, and then like the way I worked it down. So you have to include all that. Then 5 minute order flow towards my draw and liquidity, and then you wait for a 5 minute key level, and then you get a 1 minute entry from the 5 minute key level. That's my continuation model. It's really simple. Like it's if as long as you understand draw and liquidity, it's really simple.
So
So it wouldn't.
when you say order flow on the 5 minute, are you looking for like a 5 minute CISD, or are you just looking like or are you just looking for like a break, fair value gap? Like what are you looking for?
Me personally, it's usually gonna be like the first 5 minutes. So if I'm bullish, the first 5 minute bearish period that I see get disrespected, and then form a new bullish 5 minute period. That's when I consider order flow time. I don't know how other people define order flow. That's how I personally look at it, and how it's always worked for me. But really, it's like the first 5 minute period disrespect, and then the form of a new bullish 5 minute period. Because then if you're right about the drum query, like there's no reason why the new 5 minute period shouldn't hold.
Fair enough. Yeah,
As long as you properly like align the high time frame, internal, external, and all that stuff, like there's no reason why it shouldn't hold in that scenario. So
I see. Okay, that makes sense. Yeah, that makes sense. Cause like I just hate like no I just hate waiting for confirmation sometimes, bro. Sometimes I'll like be entering.
I mean, yeah, you have to wait, and it's just a safer model. If you want to trade a reversal model because you don't like continuations, then trade a reversal model.
If you miss the reversal model, you just trade continuations.
Fair enough. Yeah.
Like with the fucking fair value gap trick I showed you.
Yup.
You just
I
gotta have a
see.
clear draw on liquidity. Like at the end of the day, it's like you just have to have a clear objective.
So you guys are always in here making sure that you guys are always when you guys get on the charts, drawing liquidity is what you look at first. Like
Yeah,
where
that's
did we tap, and then where should we go towards to?
yeah, bro. That's how I build everything. Like I derive all my trade ideas from the higher time frame draw on liquidity.
Right.
Mm-hmm.
Because like I would always like look at the framework first and then look for the draw liquidity.
Yeah, bro. You need a DOL because then if you don't have a DOL, if you don't have a clear one, you're not gonna know where the fucking price is trying to go on the higher time frame. Because our job is like trying to figure out where that daily candle is trying to expand to. If it's trying to expand to somewhere,
Right.
we just want to be a part of the move, and we get our interest on the lower time frame.
And I mean, if you really get in the lab and start studying, what you're gonna notice is like being right about where the day is going and being right about the draw liquidity is the easy part. Finding an entry is the hard part. So like, why wouldn't you base your trading around the most consistent part, which is just like finding draw liquidity? Like that's gonna be the most consistent part of your analysis. So it should definitely be in the forefront.
Right. Okay. Yeah. I'm gonna start doing that more often. Like finding the draw liquidity first, and then finding the framework surrounding that draw liquidity.
Yes, sir.
Yeah, I think I need to start doing that more often because I did the opposite. I did the opposite first, so I'm like, shit, you know. Excuse me.
All right, man. Well, I gotta get up out of here. I'm hopefully I can help with something a little bit.
I got
About
you
to
guys.
hop off too.
All right, I'll catch you guys later, bro. Thank you guys. You guys are fucking goats.
Later.
Oh, this is